Welcome back to another episode of the Federal Church Presents Better Than Bloomberg, covering the global financial system collapse 2023, the worst in history. There's an amusing note from Quinn via the Burning Platform blog here. It makes a good job of ridiculing the opium going around, especially with the pundits and the money changer media. We've got strong financial institutions. Our markets are the envy of the world. They're resilient, they're innovative, they're flexible. I think we move very quickly to address situations in this country, and as I said, our financial institutions are strong. Hank Paulson, March 16, 2008. Again, they should put up a picture of the Lehman Brothers brochure I got as I graduated around this time. Actually managed to get my job over at RBS, which then imploded, and it was the biggest bank on earth at the time, and the biggest implosion. Had a Lehman Brothers brochure that had risk management, on the cover. That's one of its, what was it, I don't know, something that was great about the bank. Should put a picture up of that thing. I have full confidence in banking regulators to take appropriate actions in response, and noted that the banking system remains resilient. I can't say that without laughing. And regulators have effective tools to address this type of event. Let me be clear that during the financial crisis, there were investors and owners of some systemic large banks that were bailed out. And the reforms that have been put in place means we are not going to do that again. They just did that too, by the way. This was on March 12th of this year from Yellen. Yeah, they just bailed them out. They just bailed out 5 banks. But again, there's many more banks that are insolvent. So, what they decide to do there, that's what makes that, entire statement laughable. With the recent implosion of Silicon Valley Bank and Signature Bank, the largest bank failure since 2008, and again, they've also gone to the Fed for bailouts that exceed the amounts that were in 2008. What is it up to now? 200 billion? I had an overwhelming feeling of deja vu. I wrote the article, "Is the U.S. banking system safe?" on August 3rd, 2000. Oh, you'll have to excuse the video there. The money changers have been drinking my food. So on August 3rd, 2008, for the Seeking Alpha website, 1 month before the collapse of the global financial system, it was this article, among others, that caught the attention of documentary filmmaker Steve Bannon. Convinced him he needed my perspective on the financial crisis for his film Generation Zero. Of course, he was, pretty unknown in 2009, not so much anymore, and that continued to be unknown in 2023. Well, maybe not now. Even though YouTube over there shadow bans my stuff, steals my fucking content, fucking makes billions of dollars off fucking bastards. Quotes above by the lying, deceitful Wall Street-controlled Treasury secretaries are exactly 15 years apart, but are exactly the same. Their sole job is to keep the confidence game going and to protect their real constituents, the Wall Street bankers. And just as they did 15 years ago, the powers that be once again used taxpayer funds to bail out reckless bankers. 2 hours before the only solution the Feds know, print money and shovel it to the bankers, Michael Burry explained exactly what was about it. And that wasn't exactly it. But I guess we can go over that. 2000, 2008, 2023, it's always the same. People full of hubris and greed take stupid risks and fail. Money is then printed because it works so well. See, this is the thing. In 2023, they didn't take stupid risks. They were just stupid in thinking that the U.S. Treasuries were a risk-free instrument to hold, which they've apparently learned now is absolutely not the case. But it wasn't greed. I'd say the hubris was there. I'm sure there was plenty of hubris amongst the dipshit. And they didn't really take risks. They were just stupid. They didn't take stupid risks. They were just stupid, and the dipshits did fail. So, when Biden, Yellen, and the rest of the Wall Street protection team tell you the banking system is safe and they have it under control, they're lying. And again, they are lying. The entire fucking financial system is pretty much insolvent. Or the entire banking system is insolvent. Just as I said. Maybe not every single one of them, but a whole lot of them. Enough to be a problem for everybody. No, unless, of course, you make a donation to Bitcoin. That might stay. Maybe not on Earth, but in heaven. Our economy and banking system is so complex and intertwined. Again, this isn't the problem, even though that is a factor, especially when the big banks blow up because of derivatives trades. You know, the dipshit trade blowing up the bank's derivatives trades. But the problem here is that the dipshittery was so widespread. It wasn't that the banking system was complex and intertwined. It's that you had so many dipshits in the banking system doing the dipshit trade. That no one knows where the next shoe will drop. Well, apparently they found a couple hundred banks that are going to be that are already insolvent. So, politicians and government bureaucrats are lying to the public when they say that everything is all right. They do not know. Should you believe a governmental agency that wants the public to remain in the dark to avoid bank runs? That's the thing. Not in the dark anymore. And everybody knows these banks are insolvent, and you have to be a complete and utter dipshit to keep your money there. Not that the vast majority of America will be concerned about it, because they have no savings. They live paycheck to paycheck, if that. So, or an independent analysis based upon balance sheet analysis. Back in the days of the Big Short, speaking of Banana Republic, before the public knew about toxic subprime mortgages issued by criminal bankers and packaged into derivatives given a AAA rating by the greedy compliance rating agencies, the Wall Street cabal knew time was growing short. But it isn't even that problem here. These aren't toxic subprime mortgages that only a few people know about, only a few big banks trade in. No. These are the most commonly purchased securities products on Earth. And they were bought by dipshits. Because the dipshittery was so prevalent, pandemic of dipshits, that they managed to destroy the entire global financial system. Because they made all of their banks insolvent. So it didn't have any of these lying bastards like John Thane from Merrill Lynch, Dick Food from Lehman, Angelo Mozillo from Countrywide, Kerry Killinger from WAMU, and others from pretending their institutions were healthy and profitable. Well, you see them still pretending. They definitely aren't healthy, and they definitely aren't profitable. Right up until, which is what I was saying, where, I don't know why those bank indices haven't gone to zero yet, but I'm pretty sure it's just a hopium like this, with a bunch of fucking lying, and some desperate intervention, which will, ultimately fail. Right up until the day they collapsed. Lying is in the DNA of every financial executive, politician, government bureaucrat, and Federal Reserve hack. And as I've said this and other times before, they have to lie because they have to try to maintain confidence in the system. But when the dipshittery is this bad, I'm pretty sure no bullshit they spew on CNBC or Fox Business or Bloomberg steam. I'm pretty sure nobody's going to be enough of a dipshit to put their money in an insolvent bank. A quote from Hemingway seemed pertinent in 2008 and is just as pertinent today. "How did you go bankrupt?" Bill asked. "Two ways," Mike said. "Gradually and then suddenly." It's kind of like how this banking collapse happens. Gradually and suddenly. As in, in the next, like there were just a few banks, 3 banks, 5 banks. We got it contained. We're backstopping. We're insuring all of the deposits. Yeah, but now there's another 200 banks that are coming, the suddenly part, over the next coming days. And you're not going to be insuring all the deposits there. Unless, of course, you want to add fuel to the fire with inflation. There are many similarities between what was happening in 2008 and what is happening today. Bear Stearns went belly up in March 2008 and was taken over by J.P. Morgan in an arranged marriage by Bernanke and the Fed. And again, this isn't really Bear Stearns. Bear Stearns had real estate. You have toiletries that are absolutely worth nothing. Yeah. You would have been much better off if you were Bear Stearns. The usual suspects assured the country this was a one-off situation and the banking system was strong. Now it's collapsed. The Wall Street banks had been reporting huge profits because they were hiding the massive losses on their balance sheets. If they didn't foreclose, they didn't have to write off mortgages, the toxic debt just kept building. Summer of 2008, the banks started to report losses, but assured investors it was only a one-time hit, all was well. The week I wrote my article, Wall Street bank stocks had soared 20% or more because their reported losses for the second quarter were less than expected. Again, you should expect these banks to all go to zero. My article cut through all the BS being shoveled by the likes of Larry Kudlow, Jim Cramer, and again, when those derivatives held by the big banks implode because of the dipshit trade. Yeah, they honestly all should be going to zero. And the supposed analyst experts who still had buy ratings on these bloated dead pigs. My assessment was somewhat contrary to the CNBC lies. I would estimate that we are only in the early innings of bank write-offs. The write-offs will at least equal the previous peaks reached in the early 1990s. If a large bank such as WaMu or Wachovia were to fail, it would wipe out the FDIC fund. Again, they apparently are writing checks they can't cash because they're backstopping all the deposits now. Far more than it's in the bail-in administration companies fund there. So if the FDIC fund is depleted, guess who will pay? Right, again, another taxpayer bailout. What's another 100 or 200 billion among friends? Merrill Lynch was reporting billions in losses and issuing new stock to try to survive. They were clearly in a death spiral, and I saw the writing on the wall. How long will investors be duped into supporting this disaster? You can be sure that the other suspects, Citicorp, Lehman, WaMu, will be announcing more write-downs and capital dilution in the coming weeks. By the end of September, Lehman and WaMu were gone, Merrill and Wachovia were acquired for pennies, and Citicorp became a zombie bank sustained by the Fed for years. My article was dire, and my analysis showed we were in for years of pain and the worst drop in housing prices in history, which you're going to see too now, by the way. So not only do you get a mortgage crisis, you get a banking failure crisis, you get the crisis in the emergency commercial real estate. You get the crisis of basically every sovereign. You have the crisis in all the munis because they'll implode too. And you get crises everywhere. You get a crisis, you get a crisis. Everybody gets a crisis. And that's what you get for affirmative action. See here. There are 440 billion of adjustable mortgages resetting this year. That means that the majority of foreclosures will not occur until 2009. This means that the banks will still be writing off billions of mortgage debt in 2009. The reversion to the mean for housing prices and the continued avalanche of foreclosures are not a recipe for banking. But home prices have another 15%. Yeah, you're going to have a lot more than 15% to go on the downside in this case. The consumer is being forced to cut back on eating out and shopping. The marginal players will fall by the wayside. Big box retailers, restaurant, mall developers are about to find out that their massive expansion was built upon false assumptions, a foundation of sand, and driven by excessive debt. Oh, it's going to be much worse than that this time around. There will be millions of people unemployed. Billions. There'll be billions in poverty. Seems I was quite accurate in my assessment as whole prices went down more than 50%, not bottoming until 2012. Never mind. Not that one. This global financial collapse brought an end to the big box expansion phase as many went under and the survivors concentrated in their existing stores. We entered the worst recession since the 1930s. Well, this is definitely going to be worse than the 1930s. The most interesting part in going back to my 15-year-old article was the psychology of the crowd. Now, again, this is worse than the 1930s, because the only thing inflating the United States standard of living is all the money it can print in the form of U.S. treasuries that the rest of the world loans to them by buying those U.S. treasuries. And now, nobody in their right fucking mind will be doing it because they had printed so much money in a hyperinflationary environment, and nobody will be continuing this little scheme anymore. Let's see. Most interesting part, again, losing that reserve currency status, it's well on its way. The most interesting part in going back to my 15-year-old article was the psychology of the crowd revealed in the comments section. Despite my use of unequivocal facts, I was branded a doomer, overly pessimistic, and an idiot. That's generally the psychology of the dipshit. Many commenters said the Fed would save the day, and it was time to buy the dip. How are they going to save the day? They're writing checks they can't cash. Oh, by the way, they're the ones who made the banks insolvent, printing all of those, well, I guess technically treasury, right? Printing all of that money, but monetizing the treasury, and that's what made all the treasuries worthless. If they had bought the dip on the day of my article, they would have lost 44%. And look how much they're overlet this bear market. The question is whether the current situation is better or worse than the situation we faced in 2000. Again, we've answered this question many times. It is a hell of a lot worse than 2008. There are some factual items which may help in assessing where we are. In August 2008, the national debt was $9.5 trillion, 67% of GDP. Today, it is $31.5 trillion, 130% of GDP. Total household debt was $12 trillion in 2008 and stands at $17 trillion today. The Fed's balance sheet was $900 billion in 2008 and now starts at $8.3 trillion. Inflation was at a 17-year high in August 2008, 5.9%, 6% today. GDP in partial observer would have to conclude our economic situation is far worse than 2000. Yeah, it gets much worse from there. But all you hear is happy talk and false bravado from Wall Street analysts covering their own insolvent industry. This is what I was talking about too. It was funny watching all of these people, tell everybody they took the wrong way trade, and then are probably just going on Bloomberg saying how great it was to try to get out of it. They constantly harp on the fact that mortgage lending is much more risk averse and secure. Doesn't matter now. The underlying is worthless. Of course, the next liquidity-driven crisis is never driven by the same exact factors as the previous liquidity-driven crisis. And it's not a liquidity crisis. It's the fact that the banks are all insolvent because they're run by dipshits. But the key factors are always the same. Loose monetary policies by the Fed lead to excess risk-taking by greedy bankers, hedge funds, and corporate executives. Then something blows up and the billionaires get bailed out at the expense of the taxpayers who've been getting devastated financially by inflation caused by Powell and his printing press. So again, it isn't greedy bankers or hedge funds and corporate executives. It's dipshit bankers that caused this one. In fact, they thought they were buying up the risk-free stuff. When it is not risk-free. So far, this latest banking crisis that no one could see coming, well, every single one of them should have seen it coming. It's their job. It's the only thing that they do. So, except any honest financial analyst who understands math and history is following the same path as 2008. The narrative about banks is not taking credit risk and peddling bad mortgages is being blown up as we speak. Instead of the risk being centered on toxic mortgages, 2008, the risk has permeated every crevice of the financial system due to years of 0% rates by the Fed. Virtually everything is overvalued by 30 to 50% because cheap debt was available to everyone for everything. Extremely low interest rates led to extreme risk-taking by bankers, corporations, home buyers, auto buyers, and politicians. The unleashing of inflation by Powell's policies has led to the tide going out and revealing the swimming naked. SVB had no head of risk assessment for 9 months before it collapsed, as woke boss for Europe, Middle East, and Africa was busy organizing a month-long pride campaign and a lesbian visibility day. Instead of managing a depository institution, which is one of the easiest things to do in banking. While risk managers at banks across the world have been concentrating on diversity and pushing woke agendas about transgender rights, climate change, and practicing ESG investing, they ignored the simple concept that bonds they acquired at 1% lose money when interest rates go to 4%. And dipshits. Just as the banks in 2008 were sitting on billions of unrealized losses from the toxic mortgages on their books, the same banks are now sitting on billions of unrealized losses from the newest toxic asset, U.S. Treasuries. Everyone knows it, it's just math. They have been counting on Powell to reverse course, but with reported inflation still at 6%, he's trapped. Silicon Valley Bank and Signature Bank were swimming naked, and when depositors realized that in fact the bank run ensued, poof, sudden crisis. The narrative being spun is this is a regional banking crisis confined to smaller banks. For now. Then there's the other 200 banks they found, who will then implode the bigger banks and their derivative products. This narrative is being spun by the big Wall Street banks and their captured media mouthpieces with the intent that depositors at smaller banks would panic and shift their deposits to the safe Wall Street banks. The truth is that the Wall Street banks have massive levels of unrealized losses and desperately need deposits to keep them from facing the same fate as Silicon Valley and Signature. But unrealized losses aren't going away and won't have to be realized in the near future. Which again, the hold to maturity concept is absolutely idiotic. This is pretty funny over here. So Credit Suisse has been the crazy uncle of the financial industry, kept in the basement for years. Their demise is a foregone conclusion. But that has been covered up and ignored by those in the know. They appear to be the new Lehman Brothers. No, Lehman would have been better off. Which blow up the already insolvent European financial system and spread a contagion of losses across the financial world. This was written before the bailout of Credit Suisse, which we'll go over in a second in another video. These quadrillion and obscure derivatives are an unknown element in the coming meltdown, but you can be sure they won't have a positive impact. There's Earth, there's the central bank balance sheets, and then there's bank derivative holdings, which again are imploding from the dipshit trade. That part is hilarious. Both small and large banks have little to no reserves left to lend. Debt issuance is the Potemkin ingredient in keeping this farce of an economic system running. That debt to finance overextended consumer lifestyles, funding wars in Ukraine, and the woke agenda of corporations and politicians, the entire facade collapses. Which is what you're getting now, not to mention the end of the dollar as a reserve currency. Real wages have been negative for 23 consecutive months. Banking crisis means banks will reduce lending dramatically. Consumers have been forced to live off their credit cards for the last 2 years. Yeah, that and then some. Again, what was it? 90% of Americans have no net worth. They're all debt serfs. But as their savings dried up and their wages bought less, a deep recession is in the cards. Consumers are already pulling back and spending less. With credit drying up and spending going down, employers across the globe will start laying people off. Again, there won't be millions of people unemployed. Unemployment rises, people will stop paying their enormous mortgage and auto loans, especially when they're underwater, which, won't happen soon because the real estate is going to be worth less. Real estate values are going to be imploding. This will lead to more losses at banks, just like in 2008 and 2009. This will be much worse than 2008 and 2009. Everyone will look to the Fed to save the day, which they can't do because they're already writing checks they can't cash. And they will pretend they have everything under control, but they don't. Which is, the funny part with the cheerleading and the stuff you see on like CNBC and Bloomberg, when it's literally the worst financial collapse in history. And then back in 2008, their balance sheet was only $900 billion. Today, it is 9 times as large. The relentless QE, while interest rates were suppressed, has left them with the enormous unrealized losses on the mortgage and treasury bonds they bought. They let the inflation genie out of the bottle, and now it is ingrained in the economy. And again, you have again, dipshits there just in case. They're going to be the poorest shit on earth. And then they think they're smart with their bullshit little farce there. But they let the inflation genie out of the bottle, and it is now ingrained in the economy. Companies who gave 2% annual raises to their employees for a decade are now forced to give 4% or more due to the Fed created inflation. Inflation's going to be a hell of a lot fucking worse than that. The Fed slashes rates and goes back to money printing through QE. The current 6% inflation rate will skyrocket back to double digits. Powell does nothing or continues raising rates, the banking system will collapse. No, he actually doesn't need to raise rates anymore for the banking system to collapse. It's collapsing now. And that's the funny part. Again, they'll try to tell you it's not, but you have to be a complete and utter dipshit to keep your money in that banking system. His choices are deflationary collapse or hyperinflationary collapse. He's stuck between the proverbial rock and a hard place. Since he is controlled by Wall Street, he will slash rates, restart QE, backstop the bankers, and screw the average American as always. Well, they're screwed in any case. My conclusion reached in my 2008 article just before the financial system imploded seems for the most part to apply today. The U.S. banking system is essentially a solvent. The Treasury, Fed, FASB, and Congress are colluding to keep the American public in the dark for as long as possible. I'm trying to buy time and prop up these banks so they can convince enough fools to give them more capital. Again, their entire capital base is worthless, or has significant losses at this point. But over time, it will be worthless. They will continue to write off debt for many quarters to come. We are in danger of duplicating the mistakes of Japan early in the 1990s by allowing them to pretend to be sound. We could have a zombie banking system for a decade. We never paid the piper, which again, make sure you donate to the Bitcoin wallet in the description there, and cleaned out the excesses of the previous banking crisis. The financial condition of the nation is far worse than it was in 2008. The financial condition of the average American is far worse than it was in 2008. Yeah, just like I was saying. I think it's like 90% of America has no net worth. They're all debt service. The financial condition of the Federal Reserve is far worse than it was in 2008. The financial condition of the banking system is far worse than it was in 2008. And again, there's this systemic dipshittery. Our leaders kick the can down the road in order to give the system the appearance of stability, and we let them do it. We could have taken the pain in 2008 and let the system reset after purging all the bad debt and bad banks, but we chose the wrong path. We will now suffer the consequences described by von Mises a century ago. There is no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as a result of voluntarily abandonment of the further credit expansion, or later as a final and total catastrophe of the currency system involved. Ludwig von Mises. My advice 15 years ago at the end of the article was to reduce your deposit exposure at all financial institutions. Don't invest in financial stocks. Follow the writings of the honest, truthful analysts. His final piece of advice, which is as solid now as it was then. When you see a bank CEO or a top government official tell you that everything is all right, run for the hills. They're lying. They didn't see this coming, and they have no idea how it will end. Well, that's kind of like what you saw with the Fed there. Oh, we saved the deposits for like 5 banks. And what about all the other banks? What about all the shareholders, bondholders? Yeah, they have no fucking idea the coming story. We are at the beginning of the next global financial crisis. global financial system collapse, not the end. Fourth turnings do not fizzle out. They build to a crescendo of chaos and war, which, again, why their situation gets much worse too, because they're stupid enough to start a war with the people they're borrowing trillions of dollars from. This financial crisis will usher in the military conflict that has been beckoning for the last year. Time to buckle up and prepare for the coming storm. That's funny. Again, it's probably not buckle up. It's start hoarding some bullion. Oh, and make sure to donate, because that's why you're in this situation. Right there, Bitcoin wallet in the description there. That's why you're in this mess. God told you to donate, and you didn't donate. You didn't pay your tithe either. And now the reckoning is here. Make sure to pay your tithe. It's also tax deductible. Pay your tithe.